But first tonight, an extraordinary development in a story we've been closely following on the business, the future of financial advice reforms. Just last week, the federal government's plans to water down FOFA were rushed into Parliament under the fanfare of Repeal Day. And today that's been repealed. Finance Minister Matthias Cormann has frozen the government's proposed changes, pending what he says are conversations with all stakeholders. Senator Cormann took carriage of FOFA when Arthur Sinodinos stood down as Assistant Treasurer last week and has been keen to stress that this is merely a pause. Critics of the government's plans have been waging an increasingly vocal campaign, claiming the winding back of the best interest test and the reintroduction of some commissions could lead to another collapse like Storm Financial. We invited both sides of politics to appear on the program tonight. Senator Cormann was unable to, but Shadow Finance Minister or Shadow Financial Services Minister Bernie Ripoll, who chaired the 2009 inquiry into the collapse of Storm Financial, is in our Canberra studio. Bernie Ripoll, welcome to the program.
Thanks, Andrew.
It's almost ironic that we're talking in the week of the 5th anniversary of the collapse of Storm Financial. Do you think the government is finally listening to the critics of what it's proposing to do with FOFA?
Well, no, I don't, Andrew, and I think what they've demonstrated today is it's just another stunt. It's another stunt, just like the regulation repeal day. They have no intention of dropping their FOFA changes, and I think the minister's made it clear that this is just a pause, and that should send fear and uncertainty through the sector that is still worried about what the proposed changes are and what they mean. But people certainly understand it's not good for them, it's not good for consumers, and I don't think it's good for the sector either, that's been working very hard to professionalise, to lift standards and work under a new regime which does provide better consumer protection and just better service, better advice, better quality advice.
Why do you say it's a stunt?
Well, because the minister said it's a pause and he wants to have conversations with people. Well, we've been having conversations with people for 5 years, and it is appropriate that this week will be the 5th anniversary of the storm collapse, and people can reflect on just how bad that was, how many people were affected, people who can't get their money back, people who, in the end of their working life and in retirement, have lost all of their money. And whether it's West Point, whether it's a Trio collapse, whether it's Storm Financial and a whole host of others, it just reminds us of the need for good FOFA reforms, and that's what Labor did, and we consulted with the sector well and truly for many years, and a lot of work's gone into this. The government's taking the cheap, low road, and so I think this is just another stunt, a pause to have conversations. I think the time for conversations are over. They should actually just scrap their proposed changes.
But if the government felt that it could just get this through, that the opposition wasn't strong, it would just carry on, wouldn't it? So something must have happened, certainly in the government's thinking, to make it think that we might have a problem here.
Well, call me cynical if you want, Andrew, but perhaps the fact that there's a West Australian election and that some people might just hone their thinking on some of the worst aspects of West Point and the impact it had on Western Australia, or perhaps the fact that there's been now a change of minister and that not all is smooth sailing in this area, I think might have them just wanting to take a pause for political reasons. But the sector's still worried, and I know consumers are very worried. I know national seniors are worried. I know even the FPA are worried, and they're saying that this is a retrograde step. This is not good for anyone. As I said, it takes a pretty rare and unique government that can offend both consumers and the sector at the same time.
So you're saying that when the Western Australian Senate by-election is out of the way, then it'll just be business as usual with the FOFA changes?
Well, again, just call me cynical, but certainly I'm struggling to find another reason why the minister at this point in time would decide to have a pause. A pause to me says they're going to turn the switch back on, and they're going to do it at some time soon after they've had some conversations, as the minister says. My concern is that they'll do a little bit of listening, but there'll be no change. And what we've seen out of what they've put on the table, so whether it's through regulation or whether it's the legislation they've introduced into the House, this is a massive step backwards. Labor sent a clear signal to the market in government with FOFA, and that is that the culture is changing. And that the way...
Well, just on that, I mean, the FOFA came out of the 11 recommendations that came from your inquiry formed the basis of FOFA. Did that legislation go too far?
Look, absolutely not. And look, the inquiry was a fulsome inquiry which looked at a whole range of issues, and the fact that there were just 11 recommendations meant they looked at all the principles around what should change, and there was a lot of work that was done after that, and a lot of compromise and a lot of consultation with all stakeholders.
But if it didn't go too far, why do you think there's been so much opposition to it from many sectors within the financial services area?
Well, I don't agree that's the case. I think whenever you make big changes, changing in culture, changing in the way that a whole sector operates, it is always going to be difficult. It is going to involve some change of business models and people having to operate in a new method, a new way. That doesn't mean we ought to go back to the old culture, which the sector itself doesn't want. But it's, I think, cheap for government to just take the low and easy road and just get rid of some of the most crucial and important parts of FOFA, the best interest tests, the opt-in requirement, the banning of commissions, all of which are back on the table in black and white. And the Minister can't deny this, no matter how many op-eds he writes in the Australian Financial Review or elsewhere. It's in black and white, it's in the legislation and it's in the regulations. All of this is back on the table.
We've heard a lot of talk that the banks are lobbying very strongly behind the scenes in support of what the government's doing. In fact, they're pulling the strings. I mean, the banks must have pressured you when you were in government. I mean, how hard is it to resist that sort of pressure?
Well, look, we talked to a lot of different people right across the sector. I spoke to banks, as I did to consumer groups, as I did to retail funds and industry funds, and to a whole range of people that have a variety of views. But there was one consistent view right across. We had to change the culture. We had to get the best interests right. We had to protect consumers. We had to lift the standard in financial services. And the financial service providers themselves, financial advisors, want to be recognised as professionals. And to do that, we made those difficult changes, I would say, but really good changes.
Well, but just on that point, just on that point of wanting to be recognised as professionals, though, what does it say about an industry that fights so hard for these conflicted payments?
Well, I don't agree they're fighting hard for the conflicted payments. I think that's coming from a different part of the market.
Well, we've had them on this program doing that fighting. Just last week we had the Association of Financial Advisors fighting hard to keep the status quo.
Well, look, some might want some status quo, but even the FPA and plenty of people within the sector say the government's gone too far, even further than they had expected or wanted or even asked for. Look, there'll always be some disagreements around what an industry wants versus what consumers want. Striking the balance between good consumer protection and getting a sector to professionalise are not easy things to do. And I think we've come very close to getting that right. And we're always prepared to look at minor amendments and technical changes and things that improve legislation, but not if it means junking all of the FOFA reforms, all of the hard work and the heavy lifting that Labor did in government, just because it's politically opportunistic for this government to do that.
So just very briefly, we're almost out of time. Your take on tonight is that we shouldn't be confident that your reforms will stay intact, that this is just, as you said, a pause and then it'll be full steam ahead after the WA Senate election.
Well, look, I'm not confident in this government on a whole range of fronts. I'm not confident in them protecting consumers, and I don't think they're serious about the sector itself. The sector wants to professionalise and wants to look forward to the next 30 years of growth and development. There's so much more that can be done in this area, but let's never forget the fact, which is this. There's $1.8 trillion of retirement savings in this country, and that represents an awful lot amount of fees and charges. And the best thing we can do to protect someone's retirement income is to make sure that they get good quality advice, good sound advice, that the laws are weighted, a balance to protect them and protect their retirement savings. It's their money, they've worked hard for it. Somebody shouldn't just be able to come into your account and take whatever they want, whenever they want.
Bertie Rippel, I'm sorry to cut you off. We're out of time. Thank you very much for your time tonight.
Thank you, Andrew.